Good morning, traders. Believe it or not, how to read candlesticks and price action is a huge topic. So instead of trying to cover it all in one video, I plan to make multiple videos about this over time. This video is going to show you the bare minimum that you need to know about trading using candlesticks and price action. And as far as I'm concerned, there's simply no indicator that comes close to beating candlesticks and price action for entering and exiting day trades profitably. After I go over this short PowerPoint presentation, I'll show you some real live charts to give examples of everything I talked about, but in real time. After watching this video, if you feel that you've learned something, please take a moment to give it a like. I appreciate that. First, I'll go over the basic criteria needed before taking any trade, because candlestick patterns alone will only work if and only if these criteria are met. Even the best candlestick pattern will likely fail or do something very unpredictable without these criteria. The list is organized chronologically, meaning that this is the order you should be checking the criteria of a stock that you might want to trade. First, and by far the most important criteria that makes a stock tradable, is volume. Volume is the number of shares that are being traded at any given time. Volume represents liquidity. Liquidity gives you the ability to buy at the price you want without suffering much slippage from the spread, as well as sell the stock at your price target or stop loss if the trade fails. If you buy a stock without volume, even if there's a seemingly good candlestick pattern, you'll likely lose money because of the lack of liquidity and slippage you'll suffer. Some words you may want to Google: price slippage, price spread, unless you already understand what they mean. Next is volume again. You can't have price strength without volume. The candlesticks combined with volume will show you if there's price strength or not. Price strength is a term used to describe a stock's ability to raise the price steadily in the desired trading time frame. Third up is volume. Yeah, volume again. It really is the single most important criteria. Even if everything else is there, meaning a good candlestick pattern, a news catalyst, a low float size, and your price, you still can't take a trade if there's no volume. Here's a great example. Everyone, including me, loves to check the top gainers screener for good stocks to day trade, but being a top gainer is not enough. Some of the highest top gainers can be the worst stocks to try and trade. Look here at the top gainer from this list. TPGYWS is clearly the highest top gainer by a great deal. It's up over 400% in the pre-market alone, so it sounds like a great stock to trade. But does it have volume? Here's the same list organized by volume. As you can see, TPGYWS didn't even make it in the top 30 of the highest volume traded stocks. In fact, it was below the top 100 stocks organized by volume. It only had 80 shares being traded when I took this screenshot. So that's likely just one trader pushing the price up. So good luck selling those shares. If you're the only guy buying them, there's no one there to sell them to. Next is price. Is the stock trading in your price range? If you have a smaller account or you just prefer trading stocks inside a certain price range, this is a key consideration. Some of the biggest movers are in the $1 to $5 range. Stocks near that price have the ability to move much more than higher priced stocks. They can move hundreds or sometimes thousands of a percent in a single day. So the price of a stock is an easy way to narrow down stocks on your watch list. Next is free float size. Free float is the number of shares of a stock that's currently available to trade. Low free float size, sometimes just referred to as low float, is like a volume multiplier. A stock with a free float size of 10 million shares that's trading with a volume of 1 million shares will theoretically move the price 10 times as much as a stock with a 100 million share float size trading with that same volume. Free float size combined with volume of shares being traded is an extremely useful indicator of a stock's trade worthiness and should not be overlooked. That brings us to price action. This is the first criteria that's directly related to the candlesticks themselves. The fact that I placed this so low on the list should indicate the importance of the previously mentioned criteria. Price action is just the term used to describe the up and down movement of a stock's price, but here I'm using candlesticks to represent the price action. A simpler way to represent price action would be a price curve like you see on most Robinhood charts. but the price action curve doesn't give you near enough information to day trade off of. Finally, in order to take a trade, even if all other criteria are met, you must have a tradable pattern. Having a tradable pattern gives you three things: an entry, a stop loss, and an exit. The type of pattern you trade will be ultimately up to you. I personally prefer the ABCD patterns and 3 and 4 bar plays. I'm not going to go into much more detail about those patterns in this video, but you can see me use them in almost all of my live trade and live trade recap videos. Candlesticks are made up of only two parts: the body and the wick. And the body shows you the opening and closing of the price, while the wick represents the entire price range that the stock moved while the candle was forming. The opening price could be at the top or the bottom of the candle, depending on the color of the candle. And I'll show you exactly what that means on the next slide. The wick, however, always shows you the lowest price at the bottom and the highest price at the top, no matter what color the candlestick is. Finally, when you combine the body with the wick, you get a complete picture of how the stock was traded during the time the candlestick formed. You'll then know the price of the stock when the candle first began to form, which is the opening price, the price that the stock traded when the candlestick finished forming, as well as the entire price range that the stock traded during the formation of the candle. So you could define a candlestick as the change in share price with respect to time, if you find that helpful. The meaning of a candle being red or green is simply a color-coded way of telling you the direction of price during the formation of that candle. If it's green, then the price opened low and closed high. So green means that the price went up and that buyers had more control over the price during the formation of the candle. This may also be an indication that the upward direction and price will continue. The red candle shows that the price opened high and closed low. So the direction in price was overall down during the formation of that candle. All right, now let's look at some real live charts, for example. This part's not pre-recorded. These are stocks trading right now as I record this video, so I have no idea how the candlesticks will actually form. And this is also the end of the scripted portion of this lesson. Everything from here on out is truly live and unedited. So here we go. Let's first look at the top gainers from the pre-market. The market is still not open, so I'm going to organize by volume. This is the way I pick my stocks every single day. I already have FTFT because I was watching it in the pre-market. IDEX, whoops, let me go back. Like I said, this is totally unscripted and unprepared. But I wanted to show you real live price action and candlestick reading. IDEX is a much larger float than I would normally trade, so I'm not going to put that on the list. And then JAGX is just on the border. I really like 80 million shares or less, but we'll take a look at it. It might be worth looking at for examples. So I'm going to put it on my Friday watch list. Now, so these are in that $1 to $5 range. This is also a low float, so I'm going to put that on the list. That should give us enough just to look at some examples. So these are the 1 minute charts. These are the candlesticks. Let me just get rid of this. This is something old. So CNET is definitely strong because I can see a previous high right here, which I think, that's from the pre-market. And it broke through the high, although it's kind of chopping around over here. So this is the wick forming right now, and then the wick and body. And notice how the candles can go from red to green on the single candle. So the fact that this thing was green first showed that the price was moving up, and now that it's red, it is moving down. And notice that this is the 1 minute chart. The minute is about to end, so this candle is going to stop forming. So the price on this candle opened here, closed here, but went through this entire price range. Now this one opened down here and is moving up. It went as low as this wick shows you, and you can see the prices over here on the right hand side. Notice it's changing colors. Like this is something you don't get when you look at charts statically. You don't see the candles changing color. So you really do need to study live charts to kind of know what's going on. So this stock is kind of failing moving higher right now because this candle here is breaking down below the low of all of these candles. So right now this is showing price weakness. So the fact that this red candle formed and is so large is an indicator that the price is going to continue to move down. Now the only thing is that it's hitting this kind of a support level. So it might actually reverse here, but we'll see. That's the tricky thing about trading. You know, this is that obviously at 2 or 3 things can happen. The price could go up, could go down, or it can kind of move sideways. And you have to put a lot of different things together to make a prediction, I guess, of which way it's going to go and which way you want to trade. Now that's weird. Look at that wick. So this is kind of a Webull thing as far as I know. I'm sure it happens on other platforms as well. But here we are like halfway into the formation of this 1 minute candle and you saw that wick kind of pop up there. So sometimes I've definitely been tricked into a trade based on the wick not being there and then it shows up, and it doesn't happen so often that it's really affecting my P&L. But it does happen, and you know, sometimes you have to adjust your trading accordingly. You know, meaning that you might exit earlier because of that. So, but yeah, so notice this thing is pretty much going sideways at this point. So we don't really know which way it's going to go here. This is kind of a weird time to be looking at charts as well because the market is a few minutes from opening, so things can go sideways. They can go. I should say they could really move unpredictably at this point because when you're this close to the market open, most people don't want to enter into trades at that point. They want to sell off. So I won't be surprised if this thing continues sideways or takes a dive before the market opens. So anyway, I think that's enough as far as examples go. If you guys have any questions about reading candlesticks or price action, just let me know in the comment section below, and let me know what you think of this video, and looking forward to making the next one. I hope this helped you guys. Take care.